Okay, so we're going to look at where we bought some shares in Amazon, and we're going to discuss the fundamentals and technical reasons why we bought some shares in this company. But first, I'd like to dive into the fundamentals. We look into the growth profile of Amazon. We see that it has reinvested some of its capital from unprofitable assets into those fortress balance sheet mega caps, such as cloud and AI. And as we can see in the recent months and weeks, Amazon has seen massive structural tailwinds when it has committed an additional $17.5 billion toward AI infrastructure in its Amazon Web Services project. And this shows that the enterprise would rather spend in areas involving technology, and which shows that Amazon is still in that expansionary phase. Furthermore, if we dive into the consumer retail selectivity, we see that even though there are current geopolitical tensions, people are still willing to buy services that they have in the entertainment field in Amazon Prime. If we look at the context regarding commodities and oil, we see that the high crude price at this time adds to shipping costs, and this accelerates the consumer migration to high efficiency Prime delivery. We're looking at some upcoming catalysts. We have Amazon Prime Day on June 23 to 26, which would also support that structural volume support. We see in the weekly time frame that Amazon has been trending up literally since the beginning of time, since basically the 90s has been going up. And if we look at the most previous or the most recent area of an impulse up, we see if we draw a Fibonacci retracement from swing low to swing high, we see that price has now gone down into that discount pricing right below 0.5 Fib over there. And we see that there was also a fair value gap over there, right at where discount pricing was. If we go to the daily time frame, we see also other gaps in that area, just within that fair value gap in the weekly time frame. And at the same time, we also noticed that there was also this natural area of support and resistance in that yearly open, right where that 0.5 Fib was and right where that gap was. And so that is a high confluence area of support for me. And if we go to the 4-hour time frame as well, we will notice areas of liquidity that it made on an impulse leg up. We see that liquidity there, that liquidity there, and that liquidity there. And we did not have any kind of reaction until it came about here. And we see that on Monday, New York Open, we see that it aggressively changed character here with that aggressive push up, even leaving a gap in the market, which also shows that it has swept that liquidity in the 4-hour. And so we will be holding this for the long term, and we're expecting this to go higher around the 300 mark and probably get out half or maybe 30% of our initial shares by then until it continues